I'm one of those people that don't believe what the government tells us. There's nothing I can see in anything that in my own personal life that I spend, which shows me that inflation's been only going up 2 or 3 tenths a month every month for the last 5 or 10 years. I do think that more importantly, as much of this is a potential inflation argument, it's really setting us up for more protectionism now. So what happens now? Let's just say Brazil, which is pretty upset about this, a big exporter of copper and all. What ramification happens to them? What do they then do that cause higher prices for us in other ways? So far, the argument and the stock market has accepted the bullish argument of Trump. Tariffs are great. Look at this money coming in. But how does it impact world trade, and how net cost does that lead to us? I think the jury's still out on that. And I think when the jury does come back, it's going to show higher costs, not lower costs. I think a lot of the key commodities, look, we've had great moves, but if you look to the investment world in North America, particularly the United States, it's a yawn still among the investment community. No one's yet sending off bottle rockets even after July 4th about gold or silver or platinum or some of the other commodities that have done real well. They're still caught up in the stock market world. That's what tells me that the commodity runs is far from over. But I think the missing ingredient in this is the continuing decline in the dollar and how that's bullish for commodities as well. It's one of the reasons why that I began the year invested outside the United States when it came to general equities, because of the feeling that the dollar was going to head a lot lower. It's already off. It's had its worst 6 months ever at the beginning of any year. It's due for a bounce, but eventually I think the dollar goes even lower, and that's bullish for commodities. The stock market has been down and up a few percentage points, something which I felt that by the end of the year, that's how it was going to end, almost as it started the year. I do think that some of those, as you see in that report there, some of the concerns are getting worse, the debt crisis, the retirement crisis, something that a year or so ago, not many people were speaking about when I did, but now has moved to the forefront, and that's the infrastructure and natural disaster crisis, these horrific problems that we've seen now, loss of life, great loss of properties aided by natural disasters, but because of poor infrastructure is also coming out to the forefront now. So I'm really concerned about Trump spending time talking about how well crypto's doing and how well Nevada and some other technology stocks are doing. I think the president of the United States has bigger concerns and should be more focused on other things, but he is somebody that has simply bet the ranch of his success based on the performance of the stock market. And why I bring that up is if he's able to force, which I think he's trying his best to do, a change in the Fed governor earlier than his term, he certainly is going to appoint somebody that's basically assured to start lowering interest rates, whether they're deserving to be lowered or not. And that could be the last kick to the stock market and kind of have a melt up. So that's not something I was thinking of at the beginning of the year, but now in the way that I've seen he's acting, and it's really clear that that's what he's hoping. There's even rumors now that Powell's going to step down and all. That could be the last ingredient to what would be called a melt up in the stock market, and maybe the last hoorah. I will also make note to you that, not counting junior resource stocks, but some of the biggest gains now in the U.S. equity markets are in very, very low price stocks with huge gains. And those are the type of things that happen at the end of equity cycles, not at the beginning. The metals have actually done better. Remember now, in 2021, I have to bring it up to answer your question. I made a move that maybe 1 in 10,000 people did. I sold my general equities to own physical gold on the belief that gold itself would outperform both stocks and bonds. And it did by a factor of 4. Then I went into the major producers because of the prices going so high that they have made such great free cash flow. I think that's going to continue for them. Now, of course, I focused on to the lower end of the more riskier side, and that's junior resource stocks. I feel much more comfortable owning mining shares at this point in time than I do a high-flying technology stock. I can assure you there aren't many other people that have that same opinion, but I sit comfortable with that because I have been a contrarian my whole life. I now believe, and 3 months ago chose that silver now is in the same ballpark in gold. In fact, I think it's preparing to outperform gold for the next several months. So I still think there's a lot of gains potentially in the physical prices of metals, but I think the companies that look for them, mine it, and also explore will actually offer better leverage opportunities than the physical metals themselves. There's an estimate that 20 or 30 years ago, as much as 2 to 4% of the average American portfolio was in the metals. Now people estimate it at half of 1%. So if both parties are somewhat right, and we just get a doubling of interest from 0.5% to 1%, that's going to move markets, especially silver, which is only 1/5 the size of the gold market. That's another reason why I like silver at this point in time as well. I would have had this conversation with you 2 years ago and said, wow, this is really when the shares should take off. For whatever reason that they didn't, they seem to now want to make up for lost time. We're witnessing things we haven't seen in several years in the metals and mining. The interest that had disappeared, the amount of financings, the mergers and acquisitions that are occurring and all. I would argue that general metals and mining industry today, as you and I speak, is in its best shape in over 5 years, maybe even back to the last great run in 2010 or 11. So yes, that chart is meaningful, but I just also think that there's a bigger opportunity for the shares now versus the physical underlying metals. And that's, of course, why I focus that way as well. And by the way, speculating and gambling is the same thing. Wall Street just created the word speculating so they don't have to say gambling. But the bottom line is I'm one that likes to take a risk. I'm willing to lose a part or all of my principal. I just did. I had my worst loss ever in what I thought a few years ago was one of the best possible mining stocks. So there is substantial risk and potential loss in this. But overall, particularly if you stay with indexes like the GDX or the GDXJ, I still think they will do as well, if not better than the stock market, at least for the balance of this year and into 2026. Donald Trump, he believes he can grow ourselves out of this terrible debt and deficit mess. The problem is I don't think we could ever have enough growth without runaway inflation, which would negate a lot of that growth, in order to service and pay down any debt. I don't think in any lifetime, mine or yours, you're going to see any part of the national debt paid off. The question now that people are coming to is, are we getting to the point where we're going to have structural problems paying the interest? One of the reasons also that Trump wants to see an immediate cut in interest rates, and by a lot, is we have almost $10 trillion that needs to be refinanced in the coming months in the Treasury market. It would mean a lot if they could do that to 1 or 2% below where they're currently at. That's another reason for his wanting to see cutting interest rates. But what I think the Ray Dalias and others that continue to point out is we are really getting out of hand. We cannot run $2 to $3 trillion deficits and expect to be able to provide government services in the same manner that people were used to 10 or 20 years ago. We just won't. And the other problem that we're running into, and this plays into why I believe he's made a mistake on the trade war with a big stick, we're so dependent on foreign capital to service our debt, and I don't think we're winning any friends in this trade war. In fact, I think we're losing if we had some friends, Canada being perhaps one of the best friends that we ever had. And therefore, I think short term, it looks good, but longer term, it's causing even a bigger problem. No, I don't think there's a way out of this. I think there's a day of reckoning. We're closer to that day of reckoning now than any other time in my career. There's a great movie out from the early 1980s if people want to have a possibility of what it can look like. It was called Rollover. And those that have been around a long time will know what I'm talking about. And it painted just that, what will transpire. I'll tell you the other issue that concerns me greatly. Ever since Donald Trump came down that escalator to announce his running for president, there's a group of people who've grown very, very hatred against him. It's playing out now literally in the streets of the United States. I suspect that civil unrest is going to get worse, not better. And if I'm correct about that, that will impact all the other things that we talk about economically, politics, and what have you. And so therefore, I believe that Donald Trump is trying to turn the economy enough to where he can say, see, I'm really doing the right thing for most people. But there's a group out there that really wants to see that he's wrong and will do anything to make it wrong. And that's the battle that's still in front of us. I don't sell anything that's going to benefit by saying that. So, like if I sold gold or cabins in the woods or firearms, you can understand someone saying that. But I am very, very concerned now that America's probably gotten to the point where it's more divided now than any other time other than perhaps our Civil War, and it's getting worse, not better. I don't think the government or any government would want to go through what we saw in the 1930s of a deep deflationary depression. I think they choose the banana republic way of hyperinflation. Some would argue that's what Trump is going to do eventually anyway. And that's why he's so keen on trying to get somebody in there that's going to greatly loosen the money supply and also interest rates. But I do think for most people, whether you have the deflation scenario or the inflation, it's not going to be good for the general public. Look what happened. We had a gentleman come in with him named Musk. In the early days, they talked about, $2 trillion is going to be cut. Then it was $1 trillion. Then it was several hundred billion. Then it trickled down to $9 billion, and they had trouble passing that. This is a government that doesn't know how to do what you and I are forced to do. You and I can't keep spending more than we make without eventually getting in trouble. They, of course, don't have that issue at this moment for themselves. Two things will solve it. One, we need to pass a constitutional amendment that the government, just like other state governments we have to balance our budget. You can only spend what we have. Second is we have to create term limits so we don't have people going to Washington making a couple 100,000 and leaving with a couple 100 million. Until those two things change, I think we're always going to have these problems.